Want high returns? Mutual funds are your jam. Imagine a basket of stocks. Now, imagine experts picking the best ones for you. That's a mutual fund. You invest small, they aim big. It's like having a personal stock market guru minus the hefty fees. But hold up, not all funds are created equal. Some are riskier, some are safer. Some focus on big companies, others on small startups. Picking the right fund is key. Don't worry, I got your back. We'll break down 3 awesome funds today. SBI Small Cap Fund, for those who love a good underdog story. Axis Mid Cap Fund, riding the wave of mid-sized companies. And Quant Active Fund, the brainy fund that uses algorithms to pick winners. Small cap funds are like investing in the next big thing before they become the next big thing. Think of a startup about to explode. That's the potential of small cap companies. SBI Small Cap Fund focuses on these hidden gems. They pick companies with huge growth potential, even if they're small now. Remember, high reward often comes with high risk. Small cap companies can be volatile. But hey, no risk, no reward, right? Past performance doesn't guarantee future returns, but it gives us an idea. And guess what? SBI Small Cap Fund has been killing it. Over the past 5 years, this fund has delivered impressive returns, beating the benchmark by a significant margin. Of course, there were ups and downs, but that's the stock market for you. Overall, SBI Small Cap Fund has proven to be a solid performer in the small cap space. Now, let's talk risk. As we said, small cap funds can be a wild ride. SBI Small Cap Fund is no exception. Its risk ratios indicate a higher risk appetite. But here's the thing. Higher risk also means the potential for higher returns. If you're young and have a long investment horizon, you can stomach some volatility. Think of it like this. SBI Small Cap Fund is like that friend who loves adventure sports. They might get a few scrapes, but they're also the ones having the most fun. Section 5. Axis Mid Cap Fund. Riding the mid-sized wave. Next up, we have Axis Mid Cap Fund. As the name suggests, this fund invests in mid-sized companies. These companies are more established than small caps, but still have plenty of room to grow. Think of them as the companies that are about to hit the big leagues. They're not quite giants yet, but they're on their way. Axis Mid Cap Fund aims to capture the growth potential of these companies while offering a slightly smoother ride than a small cap fund. Section 6. Numbers speak. Axis Mid Cap Fund's 5-year performance. Axis Mid Cap Fund has also been a star performer in the past 5 years. Its returns have been consistently strong, outperforming its benchmark. While its growth might not be as explosive as SBI Small Cap Fund, it's still impressive. And remember, it comes with a slightly lower risk profile. Section 7. Risk Check. Axis Mid Cap Fund. As we mentioned, mid-cap funds tend to be less volatile than small-cap funds. Axis Mid-Cap Fund's risk ratios reflect this. It's not as risky as SBI Small-Cap Fund, but it's not as safe as a large-cap fund either. Think of it as a moderate roller coaster. You'll get some thrills, but it won't leave you feeling sick to your stomach. Section 8. Quant Active Fund. The smart money choice? Now, for the final contender, Quant Active Fund. This fund is like the brainiac of the group. It uses fancy algorithms and quantitative models to pick stocks. Quant believes that data and technology can help them make smarter investment decisions. They analyze tons of data to identify undervalued stocks with high growth potential. Section 9. Quant's 5-year story. Performance review. Quant Active Fund has a relatively shorter track record, but has delivered stellar returns since its inception. It has consistently outperformed its benchmark, often by a significant margin. However, it's important to note that past performance, especially in a shorter time frame, doesn't guarantee future results. Section 10. Risk Assessment. Quant Active Fund. Quant Active Fund's investment strategy involves a higher turnover of stocks. This means they buy and sell stocks more frequently, which can lead to higher volatility. Its risk ratios suggest that it's a relatively high-risk fund. However, the potential for high returns is also there. Think of it as a high-speed race car. It might be bumpy, but you'll reach your destination faster. Section 11. The Winner's Circle. Your reward awaits. So, which fund takes the crown? It depends on your risk appetite and investment goals. High risk, high reward. SBI Small Cap Fund. Moderate risk, moderate reward. Axis Mid Cap Fund. High risk, potentially higher reward. Quant Active Fund. Remember, this is not financial advice. Do your own research before investing. And hey, because you stuck around, I have a surprise for you. 21,000 rupees. Just kidding. But seriously, send a screenshot of this video to my WhatsApp number on the screen and I'll give you 10 free financial calculators. They'll help you make smarter investment decisions. Happy investing!